In the last video, we introduced you to the concept of maximum favorable excursion and how it optimizes the profitability of the strategy without changing the logic of the strategy. Today, we will continue to discuss the concept of the opposite of the maximum favorable excursion, maximum adverse excursion. When both concepts are understood, they can be combined to achieve true optimization strategy. For example, after opening a long position, we set a stop loss of $200. The whole process was relatively smooth, although the book once had a maximum floating loss of $150, but the final price reached our target, make a profit of $300. In this example, MAE is $150. Here, there is a small question. Can MAE be compared between different varieties? Of course, yes, because we are comparing the amount. In fact, there is not much correlation with the size of volatility. Traders who have questions about this can refer to our previous video. Volatility-based leverage using. Next, we also need to further understand the role of MAE through the scatter diagram. Every dot on the way represents the MAE of every transaction. For example, the MAE of these two transactions is $150 and $250 respectively. Suppose we set our stop loss at $200. Then the first trade may not trigger a stop loss and end up with a profit, or it may end up with a smaller loss. The second trade triggered a stop loss of $200. Moving the stop loss line up and down, we can find that the larger the stop loss amount is set, the higher the winning rate will be, because there will be fewer and fewer trades that trigger a stop loss. But the price is that the amount of each trade that triggers the stop loss will be relatively large, resulting in a very bad profit and loss ratio. On the contrary, the smaller the stop loss setting, the lower the winning rate will be. However, the amount of each loss is relatively well controlled. We need to find a balance between the two to minimize the amount of loss. Therefore, the role of MAE is to optimize the strategy so that losses are reduced. The role of MFE is also to optimize the strategy, but to increase profitability in the target market. So the problem with trading may not be the strategy itself. Even without changing the logic of the strategy, stop profit and stop loss can be optimized through MFE and MAE. Similarly, even trading strategies that have been able to achieve stable profits can further improve their profitability. If the energy-optimized strategy still doesn't work, that really requires a change to the underlying logic.